So today we'll be talking about Forex. This will just be a brief overview of what Forex is, different trading strategies and how you can get involved. Now, I mentioned before that I have written a blog article on this, and that covers a bit more detail, and there'll be future articles on this in the future. But just to give you an overview, first let's talk about the basics of Forex. So Forex, also known as foreign exchange, this involves the buying and selling of different currencies. On a daily basis, trillions of pounds is traded in this market, making it one of the largest and most liquid markets in the world. Now, in terms of the key players in Forex, that involves central banks, commercial banks, hedge funds, corporations and individual traders such as myself and you. I'm going to give a brief overview of 3 different styles of trading the Forex market. We'll be talking about technical analysis, fundamental analysis and sentiment analysis. So I'll go into detail on each of these. So in terms of technical analysis, this approach involves looking at different price charts and patterns to sort of gain insight into market movements and to make prediction. With technical analysis, you're looking at the recent past to make a guess, an informed guess about the future. Traders use a number of different tools, such as moving averages, Bollinger Bands, Relative Strength Index, RSI, just to give you an acronym, but I will always refer to it as Relative Strength Index, because as I said before, not a fan of jargon. There's also Fibonacci retracements, the cipher trends, and also looking at optimal entry and exit points. A caveat that technical analysts always give is that historical patterns may not be indicative of future outcomes. So moving on to fundamental analysis. This is what I favour, but it's not often used by day traders. This is more in line with a longer term strategy. With fundamental analysis, you're looking at economic indicators such as changes to interest rates, inflation rates, the political stability of a country as well. It also involves looking at decisions that banks make, looking at other traders' activities on a grand scale. And next we'll move on to sentiment analysis. Now, this involves monitoring the news, looking at social media trends and looking at market sentiment indicators. So with sentiment, you'll be looking at whether the market is bullish or bearish, whether it's going up or whether it's going down. I will use the term bullish when the market is going up, and I will use the term bearish when the market is going down. This isn't jargon. So sentiment analysis adds an additional layer of complexity to trading, as the sentiment can fluctuate rapidly in response to breaking news or global events. Before I did mention the risk, so I need to reiterate, Forex trading is still risky. The approaches used in Forex can also be applied to other forms of investing. I should also add that these approaches can and often are used in combination of each other, and I encourage that personally. But I'm not giving advice, just presenting information.